Well, there's no sugarcoating it, Gary. It was a massacre out there today in Asia stock markets, with every major index in the region seeing major losses, some in the double digit percentages. What's your initial take on what you're seeing?
Well, I would say that the reaction hasn't really been a very big surprise to the most of the investors, but it's just the scale of the tariff has been much larger than originally expected, of which the market may have been too optimistic before. So I think this is why we do see a lot of investors, they are turning towards the more risk-adverse approach, just trying to shield itself from tariff. So I think this is why we see money flowing into some of the Asian currencies, such as the yen, and also buying up the US Treasury as well as a safe haven.
You know, two of the biggest losers in stocks today were Taiwan's Taiex, which fell nearly 10%, and in Hong Kong, where you are, the Hang Seng index lost over 13%. So, why do you think that these two markets in particular were hit so hard?
Well, some of the sectors are really the major victims of Trump's policy on tariff. And of course, for the case of Taiwan, it is really a tech story that Taiwan has a very high reliance on US export. We are talking about around 15% of Taiwan goods exported to the US every year, which is the second largest right below Vietnam in the region. And once we see all these policies being kicked in, even though we do see some exception in semiconductors, but a lot of smaller firms in Taiwan may still face this risk of the supply chain reshuffling, which there's uncertainties on whether they can export to the US as usual. And if we move a bit towards Hong Kong, it is a financial story that even though the banking sector is not directly affected by tariff, but banks are very related to this macro story on economic growth. So if we do see a recession globally triggered by tariff, it's possible to see this shrinking net interest margin and also worsen asset quality in bank sector. But of course, for the case of Hong Kong, one extra point that we can see here is really this connection with China that if there is any further escalation or retaliation happen between the US-China competition, the impact will simply be much higher than some of the other regional peers, such as Singapore.
Given all the panic, what do you think investors should be looking at as they try to navigate this?
I think the most important point in the next 1 or 2 weeks is really about whether the U.S. Will soften its stance on tariff to negotiate with other countries. Because I think if we do not really see that, it means that the U.S. is probably quite serious in using all this tariff measure to really forcefully bring back certain manufacturing capacity back to the country, even though it may make zero economic sense. So under that scenario, it's possible to see the global economic growth worsening further than what we already expect or reflected in the market.